Hey everybody, welcome to the morning market briefing. It's Monday, May 11th, 2026. Hope you're doing well out there. Hope you had a good weekend. We got Ben back in the saddle. The big three back together again. It's been a while.
I would like to say, before we get too far, I'd like to wish a very special day to the short kings out there. It is 5/11, and we're thinking about you, and we're worried about you. You know, we're standing up here looking down upon you fondly. So stay strong out there, guys.
Almost six. Let's jump in, and then I think we got to end the call probably with a tour of Europe recap from Ben.
Oh, of course.
Chief European correspondent.
And North Africa.
Yeah, I know. People forget Ben's African-American roots. Iran, China, and the UK. Lots unfolding here. Iran has come out and said, essentially, here's what we want. Nothing mentioned really on nuclear commitments. Trump saying it's totally unacceptable. It seems to me, Ben, like we're making absolutely no progress.
Yeah, I mean, I left 2 weeks ago and I returned, and I feel like this was the headline a couple weeks ago. And yeah, I don't really have anything to say other than oil continues to move up on days where Trump tweets like this, and then it moves down on days where it says we're getting close to a deal.
Yep. Yeah. So a continuing, a very slowly evolving situation. I do wonder, I mean, there was certainly a vibe of public sentiment, I would say, 2 weeks ago, which was kind of, I would say maybe more on Iran's side in terms of they've let the U.S. overplay their hand, perhaps. And I do think the longer this stalemate goes on, the more antsy Trump's going to get. And we'll see what the next hands look like. It's just kind of my general view. I don't know if you have thoughts, Tom.
No, but I was telling Ben and I were communicating over vast distances. I've been self-educating. I've been working my way through a very interesting book called The Sword and the Scimitar by a guy named Raymond Ibrahim. I heard him on a podcast. I thought it was really interesting. But basically the book goes step by step over the first 1,400 years of the West versus Islam and why this is all happening and what the cultural landscape is. It's well, I've been listening to an audiobook. I've been sitting quietly at my desk with no one else in the office for weeks now, and so it's been pretty easy to get through as I trade and make decisions and accounts. But man, pretty interesting and not dissimilar to the 700s, the 800s, the 900s. Same playbook, I think, by both sides, and pretty interesting. So I would say book recommendation of the day.
There we go.
You know,
all right.
Check out some books by our boy Raymond Ibrahim.
I like it. Meanwhile, we have Trump going to China this week, meeting with Xi Jinping. Have we gotten more details on who's in the cohort traveling with him?
Essen is meeting with Japan and Korea ahead of it.
Yeah.
In anticipation of it, he tweeted announcement, "I'm going to Korea." So
watch out.
Fire up the gas stations. Get the Dr. Peppers on ice.
It's going to be interesting, I think, to see what comes of this. I mean, the timing, I think, is I can't tell if it's unusual or if it's like classic Trump, where it's like, hey, everybody's looking over here. We're going to go figure something out with China.
Yeah, I mean, so this was delayed a month, and I think that he would, on one hand, he would like to delay it again so he doesn't have this specter of Iran hanging over, but I think they have to.
Got to keep moving.
Yeah, got to keep moving, and I mean, hopefully he can get some favorable headlines because he certainly needs them. It was interesting coming back. Gasoline had been coming down a little bit, and I had some sticker shock at the pump yesterday at $4.14 a gallon.
What we could do is we could declare a 2 weeks to flatten the curve for hantavirus and oil go negative, and then Iran will be really at a tough spot.
Yeah, joke's on them. we got to stop the curve. We got to stop the spread. We got 2 weeks. Buckle down, everybody.
Bring it back.
I can't wait to start giving pandemic updates again.
Yeah.
Meanwhile, Keir Starmer still facing pressure, Ben.
Yeah, so this election happened last week. Interestingly, I was there on Thursday when everyone went to the polls. We were staying with my aunt and uncle in Scotland, and so they voted in their parliamentary poll, so they didn't vote for the ones that kind of go up to England. And this does not impact the seats. I think I'm not exactly sure how Parliament works, but it didn't really impact the majority that labor has. But it's interesting. I think it's just been a revolving door of prime ministers in the UK and frankly France as well, but specifically the UK, and there's pressure for Keir Starmer to resign after he had been pretty much in charge over the last, I think was it last year, he beat out Richie Sunak. So I don't know. They seem a little bit rudderless over there right now.
So you can't squash it. I mean, I saw also that the AfD got, I guess, a clear majority in West Saxony in Germany, which is, I mean, you're starting to see the make the UK great again, make Germany great again, wave start to hit some of these elections where they've been effectively squashed either through lawfare or, crazy joining of very unlikely bedfellows, for example, France. So I'm interested to see how this kind of develops over the next couple of years, and maybe we can see freedom start to make its way across the beautiful Atlantic and splash down.
And we've certainly seen in the last, even in the duration of this call, we've seen these political movements become increasingly contagious and spread quite quickly, regardless of what the movement itself may be. So could definitely be a theme that we...
This is totally random, but I saw a Bill Maher clip where he was talking about, Bill Maher, notable lefty, was concerned about the amount of freedom in the UK because I guess they just passed a law that no one born after the year 2009 will ever be legally able to buy cigarettes in the UK. Which, listen, like, smoking is obviously cool. It looks cool. People who do it are cool. It's terrible for you.
But Hicks does it.
But
smokes like a train.
Let's be honest, though. We got to have at least, you should be able to make bad decisions.
Yeah. But we're coming out. We have an official policy stance of no cool guys.
Yeah. And so I'll have to ask the young boys, because they were all born after 2009, how they feel about that. They have a tough time traveling overseas.
Something tells me it won't impact them at all.
But I thought that was nuts.
Yeah, that's crazy.
Sure. I think we can all agree that tobacco is inherently.
Now in the gas stations, they're gonna have to you must be born before this date, but not after this date to buy cigarettes.
Like, if you thought that the UK was full of pasty, squishy people who with weird accents who aren't cool, guess what? It's about to get way worse.
It seems like Europe. I would also throw this out there. Tag along effect. Europeans, if this is widely adopted, they're about to get so fat.
And we're just going to be down to bundle of sticks. We're going to totally run out of uses for the F slur.
Yeah.
Because they just throw it around like crazy over there, because that's just what they call cigarettes.
Yeah. A lot's changing in Europe. So something we'll continue to, maybe we could do a that word update every month or so.
Yeah.
I'm going to designate
when
Tom
AI takes over, there'll be no sticks available.
One thing going into the UK, which is interesting, it costs $30 per person to go into the UK.
Oh,
just to show up.
Just a little tariff.
You have to do you have to download an app called ETA, and then you have to basically put in all your passport information, take a picture of yourself, and pay $30. So basically, everything that they do when you give them the passport, you now just have to upload to an app and pay them $30.
Is that true? Is that true if you take a raft from Liberia? Just show up on the beach and start running.
What's crazy is that my uncle from Switzerland went. It cost him $200.
What is that? What is that in pounds or francs? I can't do that kind of math.
Maybe they'll keep losing pounds. My initial theory might be wrong. Ben, as we look at the economy where we are, you've been away from the desk for a little while, but how would you kind of summarize what's moving markets right now?
Yeah, this is just kind of the way I'm thinking about it. Really got three economies moving markets. You got AI and all of the ancillary impacts of that. So in things that are benefiting that we're seeing in the markets, we've gone from wave to wave. And really, it's just about following the bottleneck. In any manufacturing process, that's where the value is going to accrete. And that's what we're seeing right now. Initially, it was NVIDIA chips. Everyone wanted to get their hands on GPUs, and they said, well, we need space and power. So then all the data centers were being built, and we needed power, and those companies did well. And now it's memory. And I think memory might be pretty durable as well, because if I'm just putting all of this stuff on, whether it's Claude or ChatGPT, I want a record of all of my searches and all of this. And all of that requires memory, all these artifacts that you're building. That requires the amount of content that being produced is dramatic, and that's going to require memory chips. So right now, memory chips are the bottleneck. and businesses related to that are doing fairly well. Intel doing well on the CPU side as well. Just remarkable transformation. The U.S. is making a ton of money, by the way, on the Intel investment. Yep. So I've seen those companies in AI are doing well, and at the same time, Tom and I were talking about this morning. You're seeing a lot of layoffs. KPMG last week, but then we're just seeing it's really starting to broaden out from everything that's just associated with software and software sales to then any consultants and now any high-paid, quote-unquote, cost center data analytics person at broader in corporate America. It's ruthless, and it's in emails, it's in phone calls, and it's pretty dramatic.
I mean, anecdotally, I've a number of people that I know I've seen suddenly putting up the open to work on LinkedIn who are, I mean, way more educated than myself, but in industries that are quickly getting popped. I mean, one that's interesting, a buddy of mine who works for a company that sells THC sodas, but I think that area is sort of cratered. It's almost like, I feel like it's become very saturated, where it was once like,
here's
kind
of
a novelty, and now it's become like bottled water. For as much pomp and circumstances there's been around the cannabis business, like it just can't make money. And then, Shake Shack, I was texting with a buddy who is a Salesforce consultant. He's been out of work since January. I didn't even realize it, but I asked him, I was like, how are you holding up in this SaaS apocalypse? He's like, man, I've been out of work for months now. So it's interesting that it seems to be just permeating the markets. But we got that jobs report. Oh man, everyone's like, man, we're celebrating this massive jobs report. My guess is it's probably overstated, and those are going to get revised away. But you look at ISM services, ISM manufacturing, both in growth territory, except for the prints on employment were both in contraction territory. And that's both sides of the economy. So I think it's notable that there are a lot of people getting laid off, and it might get a little bit dicey here, and that rate cuts are coming.
I mean, we said it before, and I continue to believe this. But if you have any intention of continuing a career beyond 5 or 10 years, you got to be utilizing these AI tools. I was talking to a friend of mine in the logistics industry. He's like, the people who are just coming into the industry can rapidly get up to how far advanced I am just by using AI. So he's like, I got to use AI in order to
fend them off,
keep ahead of them. And he's like, and I have the experience, so I'm in an advantaged position, but I got to start doing that. And he's like, admittedly, I have not done a good job of doing this, but I'm going to need to. Otherwise, everyone's going to catch up to me very quickly. That learning curve is compressed.
Yeah, that's why we hired a couple AI tools to work for us.
I will say there was an interesting article over the weekend I read. I can't even remember where it was, but it was talking about specifically in the finance sector, investment banking analysts that came in. It was kind of the first crop that really were AI competent. I think everyone here, I feel like we have a real wide berth between those who know how to do a little bit on AI and those who don't know how to do anything. And I think the summary of the article that I read is that gap seems very wide. And then when you get into real world application, it's not quite as wide as you might perceive in an initial interview, onboarding, first week, things like that. The problem is, I think you could view that one of two ways. You could view that and you could say, okay, well, there's not really that big of a wide berth. I've been here 3 years. I know what I'm doing. But the reality is that gap is probably going to widen as you continue to get there. And so I think if you're, even dumb little practical thing, but I try to carve out about an hour every Friday and just like play around with tools that other people in the office are using and, see where you can see what works, see what's useful, when you use what and why. And it's an evolving space. It's moving so quickly, but I think even just being engaged with it is pretty helpful. Tom, you alluded to kind of the core economy. We're seeing some good strength there, Ben.
Yeah, we are. And this is, we talked about oil prices earlier, and I continue to be flummoxed about the strength in the core economy. Why now, when we have high interest rates and higher oil prices, and yet the underlying economic growth in the United States, so strip out AI and strip out residential construction, you kind of look at the core, it's pretty good. Jonathan, we have a chart on small construction and manufacturing firms payments. And this is money going into the pockets of people who work in the construction and manufacturing industries, especially at small companies. And that's up 40% from 2019 levels, which is pretty much higher than any other industry. In fact, overall, actually, small business employment checks are down on an inflation-adjusted basis to their employees. So I mean, what we're seeing is this core economy continue to move forward. And I don't know how long it will take the higher oil prices or higher interest rates to start to dent that, because so far it's defied my expectations. Again, it's only been 2 months, and maybe that ball will drop. But for now, I think that period is being viewed as transitory. But then kind of the third piece, so we talked AI, we talked about the core economy. The third piece is residential construction. It did pick up last month, but
there's no movement.
There really isn't. And I think that we're seeing Whirlpool was down 17% last week. Appliance sales are down. And I think as we think about all of this, just residential, who's going to buy a house if they're worried about their job and they have 6.5% interest rates and gasoline is expensive? And it's tough that it's all happening right now, which kind of to your point, Andrew, the leash that Trump has is probably getting a lot shorter on Iran because he knows about the oil prices. He knows it's summer driving season.
And getting closer and closer to midterms. I mean, when the war broke out, I postulated a big part of my theory on the war being shorter than some feared was that he would want this out of the way by the midterms. We're a lot closer to the midterms than we were 2 months ago.
Mm-hmm.
Kevin Warsh vote coming up this week. As you kind of think about his positioning, one, does anybody think he's not getting in?
I definitely think he will be. I mean,
yeah.
Everybody makes a big stink about this stuff, but everybody gets in. I mean, for the most part. I mean,
Yeah.
even not Brett Kavanaugh. What's his first name? Justice Kavanaugh. Is it Brett?
Yeah.
Yeah,
Brett.
it is Brett. Yeah.
Young Brett.
Yeah, I mean,
He likes beers.
that guy. Yeah, he likes a few beers, and that almost sank him. So
Yeah. As you think about Warsh coming in, how do you guys kind of view his initial challenges?
I mean, I think he's going to have to get messaging right on inflation. I mean, people are clearly concerned about gas prices, but that's such a small piece. And
yeah, Hicks, can we pull up that chart about gas consumption as a percentage of overall spending?
And the real story here, I think, is that despite the Bureau of Labor Statistics, the jobs market is getting grim, and it has been grim. And we're going to walk back all those jobs, and we're going to be like, oh, no, we should have cut rates because the jobs market is garbage. I just quickly asked Rock, based on the most recent Zillow information, what is the year-over-year change in home price and in rent? And it gave me 0.7% year-over-year for home prices, 1.9 year-over-year for rent, and that's in the United States. And then I said, what is the CPI's most recent reading? And it says 3% increase year-over-year in housing. So assuming, even if it was 50-50, we're looking somewhere in the low ones on rent. If it's 50% home price, 50% in rents, you're looking at the low ones. But CPI, the largest piece, much larger than gasoline,
anything else,
is running below the Fed's estimate. And sure, gasoline is expensive, but as gasoline demand goes up, the price elasticity of other goods comes into play, where you have to spend money on gas to get to work, and therefore you spend less money on other stuff. And as that demand falls, you're going to see a price fall. And so I think that that's something to think about, is that gas is going to eat up a lot of demand for other stuff. Housing is the biggest piece, and it's already cratering. So I think that gas is really a wash. I think that home prices are still the most under talked about story in all of the economy as to why we need to cut interest rates. And the only thing really to put a stop in that would be mortgage prices coming down, which I think would be facilitated by that. But that's just my thoughts.
I mean, I think a couple things. Inventory of homes are pretty high, especially in pockets. I mean, I think Seattle home inventory is up a lot, like 88%.
And it's insane. I mean, the Zillow map of, like, what is that, Bellevue?
Yeah.
Somebody posted on X over the weekend. It was just like thousands of homes, and the number of them that are priced over $1 million is unbelievable.
And it's like right now, if one of those homes we're not back in COVID where other people are helping down payments. If you are buying a house, it's because you're selling another house, and so they're all. I would guess
all codependent.
They're all contingent offers.
Yep. And not only that, but people in Seattle who own $1 million homes are likely moving to Nashville because they work for Starbucks, who wants to avoid their absolutely ridiculous millionaire's tax. Or they play for the Seahawks.
Yeah.
Or did.
They used to.
Or the Supersonic. Oh, wait, no. Yeah, they don't have a basketball.
Don't get him going, Tom. Don't get him. He just got back.
No, but I think that you have these. I mean, I saw Rick Reeder actually in an interview from last week, and he was saying the stuff that the Fed is supposed to, that the Fed can control, it has a death grip on those industries. First and foremost is housing, and the stuff that it can't really control, like that might be where the inflation, like gasoline prices.
Yeah.
Fed can't really do anything about that.
Yeah.
And yet that might be, and we get a CPI report this week, which is probably going to influence. I think we add back the October. Remember we had the October shutdown?
Yeah.
So we add that back in April for the first time. And so we might see a higher CPI print this week that gets people all sorts of worried. It's going to be a really, really interesting week.
I mean, there could be a full percentage difference between core and headline, if not more. I mean, it could be much less. It could come in cooler than people think. But I think that the fact of the matter is both of them will be overstated because both of them will have a housing number that is anywhere from 2 to 3 times higher than reality.
Yeah.
And it's going to look really, really bad this time.
Yeah. I mean, we're looking for a 3.7 headline and a 2.7 core. So, yeah, I mean, my base case would be that we are, if you said over under 1 percentage point spread, I'd take it over.
Yeah. I would see the headline being over and the core being under.
Yep.
Pretty easily.
We'll also get small business optimism coming out this week. What else are you keeping an eye on, Ben? PPI.
Yeah, I think the bond auctions are going to be really interesting. We've seen some softness. People are very scared about the long end again, which is kind of crazy to me because of the convexity opportunity there. Retail sales, I'm curious to see if we do see a substitution effect with gasoline. Right now in the estimates, we're not seeing that at all. If anything, people are buying less gasoline and buying more other stuff based on what the estimates are. So we'll have to see what happens with that. But I think ultimately this market is going to have to look to Kevin Warsh to continue to give its the next leg. And we got to look to Kevin Warsh. We got to look to Iran and get some resolution there. But I think the near term, I think having someone at the Fed who the market can actually look to and say, okay, this is where the policy is going, I think will help soothe things. And I'm specifically talking about them. Obviously, equity market's done well. But on the bond market and the interest rate side, which is causing issues in the economy, I think that's what we need.
I mean, it's all about rotation right now.
Yep.
The stock market is hotter probably than it should be. So you need to be selling stocks and buying bonds. If you're a owner of bonds, this is a great time to continue to add. And I had a little bit of a text chain with a super user. We'll call him DMFG. But the bond math is basically, I mean, the straight line is if you got a 5% bond over a 1 year period, you can withstand a 5% downside in principal value because you'll basically be flat. And that's where you get the most juice on these long bonds. If it's at 5 and you get to 5, it's still at 5 at the end of the year, then you've made 5%. You made your carry, and your bond is net shorter. And then if rates drop, then you're going to get principal appreciation. But if you just go sideways on a high-yielding bond, then you functionally make that yield. And so the 30-year bond is up a little bit this year, but because of the carry, the principal value is down, call it 3%, but you've made a half year's worth. So you're really almost flat. You're down just a little bit. And so the danger there is not really as severe as people think. And we're at max fear right now for inflation when – I mean, there's no way that oil runs to $200 a barrel. We produce too much. And then so that's where you have to kind of be like, that's where the bond math comes in, is where the higher your starting yield, the more cover you have for principal fluctuation. And then you also have the more upside for principal appreciation as rates drop. And so that's sort of the very basic bond math, but it's, we're in a good spot. And the more of those you accumulate over time, the more opportunities you have for upside, and your carry just continues to grow and grow and grow. So you know how much money you're going to make. The timeline fluctuates based on prices, but I mean, you're in great shape. So I'm very optimistic. And mortgages are stupid cheap again, and so we need to start continuing to add to those because those have been the biggest winners over the last 5 years, really.
Yeah. Cool. All right. We'll wrap it up there. We'll be back tomorrow. Y'all have a great day. We'll get the European breakdown tomorrow, Ben. We'll let you really organize your thoughts, rock and roll. Nobody's going to want to hear about CPI. So, all right. Talk to you soon.